And then once that loads in Cengage Now, you should just be able to say Start Assignment Now. Okay, so this is just a few exercises that we're going to practice together to go over the things we talked about in chapter 1 last week. So we're covering the accounting equation, assets equal liabilities plus equity, and then we're going to analyze some transactions and do those basic financial statements together. That way you'll have some practice and you'll be able to start working on your homework and getting everything ready, because we will actually test a week from today over chapter 1. I know it happens fast, right? So chapter 1 goes pretty quickly, but no worries, you'll be fine. So this first one is just balancing the accounting equation. So again, our accounting equation is assets equal liabilities plus stockholders' equity. If we know 2 of the numbers, we can always solve for the third. That first one is really easy because you just have to add, right? So what do my assets equal? What are my assets? If my liabilities are $550,000 and equity is $1,345,000. $1,895,000. Very good. $1,895,000. Okay. So again, that was pretty easy. We just add to figure it out. On B, we have assets are $776,500 and stockholders' equity is $588,800. So what would I do to solve for liabilities?
Subtract 500 from the 776.
Very good. Yeah, I would take 776,500 minus 588,800. Okay, so to solve for liabilities, I just subtract equity from assets, and you should get 187,700. Okay, and that'll put our accounting equation in balance. And then the last one, you have assets of $14,750,000, liabilities of $4,455,000. So what would that make my equity?
$10,295,000.
Very good, $10,295,000. Okay, so again, we just subtract there. So again, it's just showing you how you can keep the accounting equation in balance, how you can solve for one if you know the other 2. So that one's pretty easy. Just kind of, again, going over that basic accounting equation. Okay. So once you've done that, you can always click check my work at the bottom, and it'll tell you if you have any errors. Okay. And then I can click next to move to the second one. Okay. This one's kind of long. This is kind of the meat of chapter 1. Okay. So here, what we're looking at is, it says on September 1st of the current year, Joy Tucker established a business to manage rental property. She completed the following transactions during September. So we have several transactions throughout the entire year. And what we're going to do is show how those transactions are affecting our accounting equation. So we're showing the increases and decreases to the different accounts. So as review, I will write, our little accounting equation here on the board. Of course, it's on the screen too. Assets equal liabilities plus stockholders' equity. What are some asset accounts? What types of things are assets? Cash, good.
Cash, land.
Land, good.
Supplies.
Supplies, perfect. Any others? Equipment, I think I heard, good. Any others we can think of?
Accounts receivable.
Perfect. Accounts receivable. Remember, that's money owed to us. when we perform services on account. Okay. So cash, land, supplies, equipment, accounts receivable, those are all assets. They're of value to our company. How about a liability? We really only deal with one so far.
Basic debt.
It is debt, good. So what kind of account might be a liability?
If you want to take like the installment that's on equipment.
Good. So what that's called is like an accounts payable. But yeah, exactly. It's some type of debt. So it's when we owe money. And right now we'll put that under accounts payable. And then under stockholders' equity, there's four main accounts. There's two that increase and two that decrease equity. What two accounts increase equity? What type of accounts?
Revenue and common stock.
Very good. Revenue and common stock both increase equity. What decreases equity? Dividends, perfect.
Expenses.
Perfect. Dividends and expenses both decrease stockholders' equity. Okay. So there's some basic account information. So as we go through, the easiest thing to look at when we're looking at transactions is we want to figure out what type of accounts they are and then whether they're increasing or decreasing. Okay. So the first one, it says A, opened a business bank account with a deposit of $36,000 in exchange for common stock. So she's starting her business, so she invests $36,000 of cash into the business. So what two accounts are being affected here? Cash, good.
Also common stock.
Common stock, perfect. So is cash increasing or decreasing?
It's increasing.
It's increasing, very good. So when I come down here under item A, I'm going to put that $36,000 of cash because she put that into the business, so it's increasing cash. Bless you.
Thank you.
And then I have to kind of scroll over. That's the only bad thing about. The fun part is scrolling. Common stock also shows an increase over here under stockholders' equity. So common stock gets increased $36,000. Okay. So we only have two entries here, so our accounting equation stays in balance, right? Assets equal liabilities plus equity, because you only have assets of $36,000 cash, no liabilities, and then $36,000 in equity. So after every transaction, that's our goal, is to make sure that that accounting equation stays in balance. Assets should always equal liabilities plus stockholders' equity. So that's why there's like a balance line here, because after every transaction, we're going to make sure and do the balances of all of our accounts, so that way we can kind of keep a running total and we can verify that we're still in balance. So item B, we purchased office supplies on account for $1,800. So what two accounts are being affected if we purchase supplies on account?
Supplies and accounts payable.
Good. We have supplies, which is an asset, or office supplies. I think they just have it as supplies. Yeah, supplies. And then accounts payable. Because we owe for these, we're going to pay them in the future. We're creating a liability. We're creating a debt. So our supplies, if we purchase supplies, are they increasing or decreasing? Increasing. Good. So under supplies, I'm going to put $1,800. And then accounts payable is also increasing, okay, by $1,800 because we're increasing our debt, okay? So then on that third line where it says balance, I'm just going to carry down, I would add or subtract if necessary, but cash is just $36,000. Accounts receivable has nothing. Supplies is $1,800. Accounts payable is $1,800. And common stock is $36,000. So if we were to check our accounting equation, it would be in balance because we have total assets now of what, 37,800 plus liabilities of 1,800, or equals liabilities of 1,800 plus the common stock of 36,000. So our accounting equation is in balance. So big things to remember as you're going through and kind of identifying accounts and looking at transactions is to remember that at least 2 accounts are affected each time. Okay, so I can't just show an increase to cash and not show what we did, what happened, how did we get that cash. So make sure you're showing both accounts that are being affected. That's usually a common error, is that we'll show one side of it. Be like, oh, we purchased supplies for 1,800. Great. But how did you purchase them? Well, it's either going to be cash or accounts payable. Okay, so you have to show both sides of what's going on. All right, let's look at item C. It says received cash from fees earned for managing rental property of $6,750. Well, it tells us received cash, so that part's pretty easy, right? We know, okay, cash is increasing. We received cash from fees earned for managing rental property. So what other account is being affected there besides cash?
Fees earned.
Fees earned, very good. And fees earned is a revenue account. That's just what they call our revenue. So our business is managing rental property. So we actually performed a service. We managed some rental property and we earned revenue. Okay. And they paid us right away. So $6,750 goes on the cash side. And then I would go out to fees earned and put that $6,750. So that one's increasing cash and increasing our revenue account fees earned. And then we just go back through and balance. Okay, so now we need to add it up. So my new cash balance is what, 42,750? So I just add those together. And then supplies is still 1,800. Accounts payable is still 1,800. Common stock is still 36,000. And fees earned now has a $6,750 balance. Any questions so far? That's good. Okay. Item D, we paid rent on office and equipment for the month of $5,000. So if we paid rent, what accounts are being affected there? It's not supplies on this one. Cash, right? Because we paid. Anytime we see the word paid, that's a good idea that cash is doing what? Is it increasing or decreasing? Decreasing, perfect. So we know cash is decreasing. And what did we do with that cash? We paid rent, right? Well, when we just pay a normal bill, like a monthly bill, which is what this is, that's an expense, okay? So on cash, on the balance here, I'm going to put a negative sign, so minus 5,000 to show my cash is decreasing. And then I'm going to scroll over to the right, and on my rent expense, I'm going to put in a negative 5,000 as well. Okay. And we're showing that as a negative. Sometimes it's kind of tricky, but basically because expenses decrease equity, right now we're going to show that as a negative because it's coming out of equity, okay? Okay, so we paid an expense, paid our rent. So again, I think I put that on the wrong line, didn't I? Need to go down one line. So now I just need to balance everything. Well, what's my new cash balance? How much do I have in cash right now?
37,750.
Very good. We just subtract. So 42,750 minus 5,000. So 37,750 in cash. And then again, I just carry down my balances for the rest. Supplies is 1,800. Accounts payable is 1,800. Common stock is 36,000. Fees earned is 6,750. And rent is negative 5,000. Okay. Okay, now we're ready for E. So in E, we paid creditors on account $1,375. So we're paying towards, they're not like explicit here, but basically we're paying what we owed for those supplies. So, you know, we purchased supplies on account in item B for $1,800. Now we're paying towards that. We're not paying the full amount, but we're paying off some of what we owe in supplies. So if we're paying creditors on account $1,375, what two accounts are being affected?
Supplies and account payable.
Accounts payable is good. Yes, accounts
and
payable.
also supplies.
It's not supplies because those supplies are still in our, yeah, you got it, cash. Perfect. That one is tricky. That one always throws everyone. It really does because you're like, okay, supplies. But yes, you're correct. Accounts payable is doing what? What's happening to accounts payable? It's decreasing, right? Because we're paying towards our bill. So I'm going to put a negative 1,375 under accounts payable. Okay, because we're paying towards our bill. So nothing's actually happening to the supplies themselves. They're still, we still have them, but we're making a payment. So that's also decreasing cash. Okay. So when we pay towards a debt, anytime you see the word pay, that's going to be a decrease to cash. Okay. And then in this case, we're paying off part of our debt. So it's decreasing our debt or decreasing that accounts payable. Okay. So that one gets a little tricky. That one always throws everyone for a loop a little bit at first. Okay. Any questions on that one? So now cash, I just rebalance it. So I had 37,750 and I subtract out 1375. So what's my new cash balance?
Your cash balance would be 36,375.
Perfect. Yep, 36,375. And then, you know, good old pulling down the other accounts here. So supplies is still 1,800. Accounts payable has changed though. How much do we owe now on accounts payable?
425.
Perfect, 425. So we subtract, since we did make a payment. Okay, and so now we owe $425 on that account still. And our common stock stays the same. As do our fees earned and our rent. Okay, let's see. We are on, just scroll back over, lost my scroll bar. There it goes. Okay. So we are on F. We billed customers for fees earned for managing rental property of $9,500. So what happened there? What accounts are affected if we billed clients for fees earned?
Accounts receivable
Perfect. Good.
and fees earned.
You got it. Perfect. So all we're saying here is that we perform services as part of our business. So we're earning revenue. So fees earned is going to increase. But they didn't pay us right away. So we're billing them. So that's money due to us. So that's an accounts receivable, which is an asset. Okay. So we're going to put that $9,500 as an increase to accounts receivable. Okay. So accounts receivable is increasing. They owe us money. We're going to invoice them. We're sending them a bill. And then fees earned increased by $9,500. So if you remember when we were talking about the accounting principles, we have that revenue recognition principle. So that's where this comes into play. We're not getting paid yet, but we did the service already. We earned that revenue. So we're going to go ahead and recognize that $9,500 of revenue the day the services were performed, because that's the day we actually earned the revenue. And then they're going to pay us at a later date. So that's why we log it under accounts receivable, which is an asset. And then we'll just balance. So cash is still $36,375. Accounts receivable is now $9,500. Supplies are $1,800. Accounts payable stays the $425. Common stock stays at $36,000. Fees earned. What's my new fees earned amount?
$16,250.
Perfect. Thank you. $16,250. My scroll bar ran away again there. Like sometimes it's there. And then rent is still a negative $5,000. Any questions on that one? Okay. Alrighty. We are on G. Paid automobile expenses for month, $840. And miscellaneous expenses of $960. Well, they kind of give you that one, don't they? But it's a different situation here because they're actually telling us we paid both automobile expenses and miscellaneous expenses. Okay. Well, if you scroll to the right, or you might see all of yours on here, those are two different expense categories. And we want to keep them separate so we know how much we spent. So we're actually going to have 3 accounts affected in this transaction. Cash is going to go down for the full amount, both expenses we paid. But then we're going to log, automobile and miscellaneous as separate expenses. Okay. So this is a good example of you can have more than 2 accounts being affected by one transaction. Okay. So let's see, we had automobile expenses $840. Miscellaneous of $960. So how much did cash go down total? Very good, $1,800. So on G, I'm going to put a negative $1,800 under cash. And then I'm going to go over to my expenses to stay on the right line. What was that, G, right? Is that G?
Yes.
Yeah, thank you. Like, it's hard to see when I'm scrolling back and forth and all around. So on G, my auto expense is going to be a negative, what was that?
$840.
Thank you. Like my brain isn't remembering numbers. And miscellaneous was $960, right? Okay, thank you. The print is so small on these sheets, I'm like, I don't remember. I have to really look, it's kind of dark up here. Okay, so a negative $840 under auto expense and a negative $960 under miscellaneous for a grand total of a negative $1,800 out of cash. Okay. So what's my new cash balance?
$34,575.
Perfect, $34,575. And then I just really have all my other accounts to carry down, right? So accounts receivable is $9,500. Supplies is $1,800. Accounts payable is $425. Common stock is $36,000. My fees earned is still $16,250. Rent expense is still negative $5,000. And then I just need to carry down those 2 new expenses. So the negative $840 for auto and negative $960 for miscellaneous. Only 3 more left, right? So. Okay, H, we paid office salaries of $3,600. So what 2 accounts are being affected if we paid salaries of $3,600?
Oh, no. cash and salary expense.
You got it. Perfect. Yeah, cash and salaries expense. Cash is doing what? Decreasing. Perfect. That's 3,600. So minus 3,600 on cash. And salaries are, again, are just an expense. It's an everyday, check that we write. Not every day, hopefully, but every month, I guess I should say. That would be an expensive salary expense if it was 3,600 a day for a small company. And then I'm going to find salary expense. And that's a negative 3,600. So again, salary expense, these are all just expenses you're just paying out of cash, okay? So expenses are rent, could be supplies if you're paying cash for them. Obviously salaries, it could be anything that we're just making a monthly payment. If we had like utilities, gas, electric, that sort of thing, anything like that. And then again, we get to do the fund balancing act, right? So what's my cash now?
30,975.
Perfect, 30,975. And then everything else is just carrying it down. So accounts payable, 9,500. Supplies, 1,800. Accounts payable, 425. Common stock, 36,000. Fees earned, 16,250. Rent, 5,000. The office salaries is now a negative 3,600. And then we still have the negative 840 for auto expense and negative 916 miscellaneous. Okay, now we're ready for I. Okay, this one's a little tricky. We determined that the cost of supplies on hand was $350. Therefore, the cost of supplies used during the month was $1,450. So what that means is, we purchased $1,800 worth of supplies. And as we go through the month, we're consuming those supplies. We're using them. So when we first logged them, we logged them as an asset because they are of value. They're of worth to our company. They help us earn revenues. As we use up supplies, we need to expense them off. Because now we're showing we really only have $350 worth of supplies at the end of the month. So our asset account supplies at the end of the month should actually just be $350. So we're going to take that $1,450 and expense it out. Okay? So all we're doing here is showing that we used up $1,450 worth of supplies. So to do that, I'm surely just going to take that negative $1,450 right out of supplies. Okay? Negative $1,450 out of supplies. When I do that, when I balance it, that would leave me with the $350 that they told me I still had. Okay? So at the end of the month, we always look at how many supplies we used up, and we subtract that out of supplies. And then on the right-hand side, that's going to be a supplies expense. So supplies expense, negative $1,450. Okay. So nothing happens to cash or accounts payable or anything because we're not paying for the supplies. We're just showing how many of those supplies did we use up. Once they're gone, we need to expense them out. Okay, whether it's paper and toner for the printer, maybe pens and pencils, whatever kind of supplies we purchased, we no longer have those $1,450 of them anyway. So we need to show that as an expense to our business. Okay, does that make sense? Perfect. And then you just need to, of course, balance everything, which is really just pulling everything down. We already balanced supplies, which should be $350, which is how many supplies we still have. And then everything else just gets carried down. So cash is $30,975. I think you know the drill. I won't read them all off, right? So just make sure you carry down your balances. So I have that new supplies expense of a negative $14.50. And then once we carry all those balances down, we have one more transaction left. We have J, we paid dividends of $3,000. So what two accounts are affected if we pay dividends $3,000?
Cash and dividend.
Very good. Cash. So negative 3,000 since we paid. So cash is a negative 3,000. And then you should have a dividends account right after common stock. Dividends also get subtracted out of equity just like expenses. So we're going to put in a negative 3,000 for our dividends. I put that on the balance line, sorry. Negative 3,000 for the dividends. And then we've logged all the transactions, so we just need to do our final balance. So at the end of this month, our cash is now what? $27,975. Accounts receivable is $9,500. Supplies are $350. Accounts payable $425. Common stock $36,000. Revenue $16,250. And then we have all of our expenses. Rent expense, $5,000, negative $5,000. Oh, dividends of negative $3,000. Salaries at $3,600, supplies of $1,450, auto $840, and miscellaneous $960. Okay. So now we have logged all of the transactions for this first month of business. Now, when you were doing this on the homework, you can use the check my work button. It's unlimited. So if you want to, log one transaction and make sure you're right, hit the check my work, okay? So I'm going to hit check my work. And you should see, a bunch of green check marks. You can always scroll through and make sure everything's green. So again, you can use check my work an unlimited amount on your homework. It won't be activated on the test, I know, but you will have it on your homework, so you can click that as many times as you want. It's a learning experience, so it'll help you get that correct. Any questions on any of the transactions? Okay. So number 2 here is just asking a question or filling in a blank. So stockholders' equity is the right of stockholders to the assets of the business. It says these rights are, and if you click the drop down, it's either decreased or increased by issuing common stock and revenues. Is it increasing, or do common stock and revenues increase or decrease equity?
Increase.
Increase, perfect. And then dividends and expenses, do they increase or decrease equity? Decrease, perfect. Again, we covered that, right up here. But again, it's just good to reiterate that as you're learning and trying to commit it to memory. Step 3, it says determine the net income for September. Okay, what is the formula? Does anyone remember how you calculate net income? Yeah, revenue minus expenses. Okay, so you're going to take your total revenue, which in this case, we only have one revenue account, and that's the fees earned account. So fees earned was what, $16,250? And then we're just going to subtract out all of the expenses. So minus $5,000 for rent, and then we had minus $3,600 for salaries. And then what was it? $1,450 in supplies. And we just had the other two, $840 for auto and $960 for miscellaneous. okay? So your net income, you're going to take revenue, which is fees earned, and then subtract out all of your expenses. Okay, so when we do that, how much was our net income for September?
4,400.
Perfect, 4,400. Okay, and if you move your mouse over, whenever there's a green word in your homework, the cool thing is it kind of gives you a definition there. So it actually shows me net income is the amount by which revenues exceed expenses. So if you see a new term, you know, that you don't remember from the reading or from lecture, if it's in green, it will tell you that. So you don't have to go and look it up. Kind of nice, right? All in one place. So yeah, 4,400. So we took our fees earned minus all of our expenses, and we got a net income of 4,400. Pretty good for the first month of a business. Okay. Number 4 says, how much did September's transactions increase or decrease retained earnings? That's a good question. How do we calculate retained earnings? Anyone remember?
Just dividends and net income, constant.
Yeah, we're going to take, since this is a new business, we don't have any beginning retained earnings. We'll see that in our statement. Normally, retained earnings is beginning retained earnings plus net income minus dividends. Okay. Well, in this case, we have no beginning retained earnings because we're a brand new company. So it's net income minus dividends. So we have net income minus, what was it, 3,000 in dividends? So we have 1,400 in retained earnings. So again, retained earnings, you'll always take beginning retained earnings plus net income minus dividends.
I have a question.
Sure.
On the expenses, it pretty much handholds you and says, you know, rent expense, salary expense. So for revenue, will it be listed on these types of things as like rent revenue, interest revenue? Like, will it do the exact same thing, be redundant?
Sometimes that makes, it's like a lot of times in the first few chapters when we're dealing with the service company, fees earned will just be our revenue account. So they may say, you know, you build clients for services performed, and you just have to know that's a fees earned. But yeah, there will be times when there will be like rent or interest revenue, and it kind of varies.
It's not for chapter 1.
Yeah. So yeah, if they don't give you a specific revenue account, we usually call it fees earned. It's a good question. So on number 4, retained earnings increased by 1,400. I think that's it on this one. Any questions on any of the transactions we covered, or net income, retained earnings, any of that? Okay. So that's like a lot of chapter 1. It's just being able to go through, understand transactions and how they're affecting those accounts. So, you know, it's a good idea to review, you know, what are assets, liabilities, and equity, because you do need to know that in order to identify those changes. And then just always ask yourself what's happening, okay? And remember that at least 2 accounts are being affected by every transaction. So once we're doing that, we can click next. And these next ones are doing income statement, and then statement of retained earnings, and then balance sheet. So those are our 3 most common financial statements in financial accounting. So we always perform them in that order. So we always, after we do all the transactions for the month, the first statement we prepare is the income statement. Well, the income statement is just showing this income. So on your income statement, you're truly taking your fees earned and then subtracting out all of your expenses to get a net income. Or if expenses were greater than the revenue, it would be a net loss, okay? So these are the little blank worksheet problems. So they give us instructions. We're doing different numbers than what we just dealt with. I don't know why they can't give us the same ones, but we'll roll with it, right? And make it easier. So this is Paradise Travel for the year ended May 31st, and they show us fees earned of $900,000, which is our revenue. And then we have 3 expenses: office expense, miscellaneous expense, and wage expense. So they want us to prepare an income statement and choose the right labels and descriptions and headers and all of that to complete this. Well, when you're working in these blank sheet problems, you can click up here like instructions. Since it's blue there, that means that that's what's displaying. If I click on labels and amount descriptions, it shows me the labels and descriptions I'm going to use. So you can always refer back to that, so you're typing in the right labels and descriptions. And then if I click on the actual income statement itself, here's where I'm going to actually prepare the income statement. Okay. So a few things over here on the right, you can kind of change the layout of how you have it displayed on your screen. So however it works best for you. I'm going to take away the labels and amount descriptions and the instructions just to be able to show you on the screen. But you can put them side by side as you work, you know, just kind of see. But it's just easier in here. A couple other things I did want to show you because I hadn't showed you yet. When you're in the homework, or when you're in, well, just really the homework, up here at the top, there's some other links that you can get to. So the first one is the ebook. You can actually click that and it'll take you to the objective that this example is covering. So if you were struggling, you can go into the ebook and read about it. In this case, we also have a show me how. So if you click on that, it'll take you to a video about an income statement and show you how to prepare it. So when you get home and you forget what we talked about in class, you're doing the homework over this weekend, you know, and it's been 4 or 5 days, you can click show me how. There's also a calculator. If you click it, it'll pop up on your screen. You can move it around. So if you forget your calculator, or you're at home and you don't, you know, can't find it, whatever, you have that. You can always print the item as well. If you wanted to print the instructions, just click on instructions and hit print item. So there's just some options along the top for you to kind of help you do your work. Okay. But again, we're preparing an income statement. And again, income statement, you can see it has a blue link. So if you click it, it tells you what an income statement is. Okay. So this is the typical header for an income statement. We always start with the company name, which is Paradise Travel Service. And then on the second line, we put the statement name itself, which is income statement. On the third line, for our income statement and our statement of retained earnings, we are going to put for the year ended and the date. And this was a year ended one. Sometimes it might be for the month ended, but we're going to do for the year ended. So for the year ended, and it was May 31st, 2018. As you can see, if you type it wrong, it will turn red, which is helpful too. And this was on that label instructions that it gave me as well. So this is my official header in accounting for an income statement. As you see, it's centered over the whole statement. We have the company name, the statement, and then for the year ended May 31st. So we're showing revenues minus expenses for the whole year ended. Okay. On the first line, if you click in it, it says account. So I know I need to put some account in there. I'm putting my fees earned. I only have one revenue account. So I'm going to type fees earned. And then over in the rightmost column, since it's a total amount, I'm going to put my total fees earned, which they gave us at $900,000. Okay, so on an income statement, the rightmost column is for total amounts. So we only have one revenue account, so that's the total. On the second line, it's looking for a label. Well, we need to add up our expenses. So my label is actually the word expenses. And then you'll, they'll put the colon in for you. Don't type the colon. So just type the word expenses. And then we have 3 expenses that we're going to add up. Okay, so we have wages expense. So I'm going to type wages expense on line 3. And that amount is going to go in that first number column. And wages were $450,000. So wages expense of $450,000. On line 4, I have an office expense. Office expense of $300,000. Office expense of $300,000. And then on line 5, I have miscellaneous expense. Miscellaneous expense of $15,000. It's always a fun one to type, right? You can always refer back to that labels page if you need the spelling or anything. Okay, so those are my 3 expenses. I have wages, office, and miscellaneous expense. I type them all in the leftmost column, and then I'm going to add them up. Okay, so my total expenses, what I'm going to type on line 6 there is total expenses. Total expenses. And then I'm going to put that total in the rightmost column. So I add them all up, and what's that? 765,000. 765,000. And since that's a total, it goes in the right-hand column. And on my last line, I'm going to type net income. Maybe. Net income. And again, to calculate net income, I'm going to take fees earned minus total expenses. Okay, fees earned minus total expenses, 135,000. So as you can see, as you work in this statement, it kind of adds in some formatting. So whenever we're totaling something up, it puts a solid line under it to show that we're doing some kind of math. And then the same under total expenses, we're taking fees earned minus total expenses, so there's a line under it. And it puts this formatting in for you. And then anytime we have a final number, we double underline it in accounting. Okay, so that's just some of the formatting. Okay, so any questions on the income statement? It's not too bad, right? It's pretty easy. Revenues minus expenses. It's just kind of knowing the format.
I actually have a question.
Sure.
For the expenses, is there a specific order, like what is the specific order you're always supposed to put them in?
I think in this chapter they do it from highest to lowest. I honestly, like normally, yes.
I read it says you're supposed to do it from highest to lowest, but if it's like land, I think land always goes at the bottom of the expense. But it will show you in the homework. So
Thank you. Yeah. Yeah. So they do it highest to lowest. Honestly, like I would normally not count off for what order you put them in, but yeah, the book I think prompts you to do it highest to lowest. Yeah, you know, and so when you're doing that on your homework, if you do get something wrong like that, it might just be an order. They may count you off if you put them in a different order. So that's a good question. And again, you could use check my work, make sure everything's good. Oh, and while we're looking at it, if you see down at the bottom, you have an email instructor option. So if you're working on the homework, we're not in class, and you get into a part where you're getting something wrong and you don't know why, if you click that email instructor, it will send me what you're working on, and you can be like, hey, I don't know how to calculate net income, and I can answer you back. Okay. I'm going to click next. This next one, we're doing a retained earnings statement. So this statement honestly reports on our retained earnings. So we, again, just like when we were talking about calculating retained earnings, that's what this statement reflects. So retained earnings is always beginning retained earnings plus net income minus dividends. That's like your formula. So that's what our statement or our retained earnings statement is going to report. So here it gives us, if you notice, it's the same amounts as the income statement. So at least there we get a little bit of a break. It may not be that way on your homework because you'll get different numbers. But they give us the revenues and expenses. And then it says Everett McCauley invested an additional $40,000 in the business in exchange for common stock, and $10,000 of dividends were paid during the year. Retained earnings as of June 1st, 2017 were $300,000. So he had beginning retained earnings of $300,000. So we're going to prepare a retained earnings statement for the year ended May 31st. Okay. So there's the instructions. Again, I could click on labels and amounts, and it shows me the labels I'm going to use, or that I may use. You won't use all of them. And then I click on the retained earnings statement. Okay, go away. There we go. Sorry, trying to get it to go away there. So retained earnings statement. This one, again, you start with the same type of header. So you still start with the company name, Paradise Travel Service. The second line is your statement, which in this case is retained earnings statement. And the label is the same as it was for your income statement. So it's still for the year ended May 31st. So I'm going to type for the year ended May 31st, 2018. I keep wanting to type 19, 2018. Okay. We're still going to use the rightmost column for totals and the left if we need to add or subtract anything. Again, for your retained earnings statement, the first one is going to be an amount description. We always start with beginning retained earnings. So we're going to say retained earnings, comma, June 1st, comma, 2017. So we're reporting on the year that started June 1st, 2017 and is ending May 31st, 2018. Okay, so that's our fiscal year. We run June 1st through May 31st. So our beginning retained earnings would have been June 1st of 2017, the first day of our month. If we were working on a calendar year, obviously it'd be easier, just be January 1, okay? And we're going to put this amount in the rightmost side, and they told us this in the instructions that it was $300,000. So they told us our beginning retained earnings was $300,000. So retained earnings, June 1, 2017, $300,000. The next two lines, we're going to calculate our change in retained earnings. We're going to do that by starting with net income. Okay, net income. Well, we calculated this on our income statement. So we know it's $135,000 in the left-hand column there. However, in your homework, we may not have done the same numbers on the income statement. It may change. So you may have to take fees earned minus your expenses, okay, to calculate net income. So there's our net income. And then we're going to, on line 3, put dividends. Dividends. Well, dividends decrease retained earnings. And they told us we paid $10,000 in dividends. So I'm going to put a negative $10,000. Negative $10,000. So you can just put your minus and it'll change it to the parentheses. In accounting, when you see a number in parentheses, that means it's a negative number. Okay. So we type it in as a minus 10,000. And then on line 4, we're going to type change in retained earnings. Change in retained earnings. And then we're just going to calculate that change. So 135,000 minus 10,000. So this year, we have increased our retained earnings by $125,000. Net income minus dividends is our change in retained earnings. And then the last thing we do on line 5 is say retained earnings, May 31st, 2018. So we're showing what our retained earnings are at the end of the year, which is beginning 300,000 plus our increase or our change in retained earnings of 125,000. So we just add those two together to get 425,000. So your retained earnings statement is always the second statement you prepare. And the reason for that is if you prepare your income statement first, you have that net income amount, right? So you do your income statement, get net income, go to retained earnings, pop in your net income. Now, if that had been a net loss, if our expenses were more than our revenue, that would be a negative number as well. And our retained earnings would be decreasing. Okay? And that is possible. Any questions on the retained earnings statement? So that's always the format. Beginning retained earnings, calculate your change in retained earnings, which is net income minus dividends, and then calculate your new retained earnings or your ending retained earnings. So our retained earnings at the end of this year is 425,000. Again, you can always hit check my work. And we move to the last one. Okay. Our last one is our balance sheet. So the balance sheet is the last statement we prepare. All it does is shows on this day that our assets equal our liabilities plus equity. So that's the whole point of a balance sheet. It's really more of an internal document just to show, we still show it to outside users, but it's really more for us like checks and balances. We show that everything's in balance, okay, after we performed all of those transactions. So under instructions, it says the balances of Paradise Travel Services accounting equation for the year ended are listed below. And it tells us, these are the same numbers we just dealt with. So our dividends were 10,000, retained earnings at the beginning were 300,000. And then it gives us all of our accounts out of order, which is always fun, right? So we have fees earned, which is revenue, and then we have our three expenses. We have accounts payable, accounts receivable, cash, common stock, land, and supplies. It wants us to prepare a balance sheet as of May 31st. Again, you can bring up your accounts and your labels and your descriptions, but I'm going to bring up the actual balance sheet. Okay. So what's different about a balance sheet is when we put in the date, we just always put today's date. So I'm just going to type May 31st, 2018. Okay, so you still have your company name and your statement header, but then on the balance sheet, you just put today's date, because what we're saying is as of today, these are our account balances and they do balance. Okay. And then under assets, we're going to start with cash. Cash is always our first asset listed. Okay. So when you're listing assets, you usually start with what we call current assets. Okay. Assets that are easily converted to cash. So we call them liquid assets. So we always start with cash as our first asset listed. And in this case, it was 52,000. 52,000. Okay. And then we go with accounts receivable. Accounts receivable, which is usually your second listed there, which is 38,000. So on line 3, accounts receivable of 38,000. And then our next account in this case is supplies. Supplies, which would be 3,000. Supplies are 3,000. And then our last asset we're going to list is land. Okay, land, which is 450,000. So land gets listed last. And that's because we consider that what we call a long-term asset, so land, equipment, anything we're going to keep for more than 1 year in our business cycle. And so those get listed last. On line 6, we want to add up all of our assets. So we're just going to type total assets. And for the sake of time, I'll give that to you. It's 543,000. 543,000. Okay, so in our first section of our balance sheet, we just add up our total assets. On line 8, we're going to put our liabilities. In this case, we just have the one, accounts payable. Accounts payable. And it is 18,000. 18,000. And then under stockholders' equity, we'll put common stock. Common stock, and this goes in the leftmost side because we're going to calculate a total. That is 100,000. The common stock is 100,000. And then we know revenue, expenses, and dividends all affect equity, okay? Well, we've already calculated that retained earnings. If you remember, retained earnings is technically revenue minus expenses minus dividends. So the only account balance we're going to put under equity for those three is retained earnings. And as we go through like chapters 2 and 3, this will make even more sense. But just know you don't list revenue, expenses, and dividends all separately because we've already lumped all that together. Through our income statement and our statement of retained earnings, we have taken fees earned minus expenses minus dividends and then added them into retained earnings. So retained earnings is all three of those accounts. It's beginning retained earnings, technically plus fees earned, minus expenses, minus dividends. So it just puts them all together. And we already calculated that in our last statement at 425,000. Again, just a heads up on your homework, you may have to calculate retained earnings. So you may actually have to take beginning retained earnings plus net income. So you'd have to calculate net income and then subtract out dividends, okay? But we had done these same numbers on the previous one. So common stock plus retained earnings on line 12 is going to be total stockholders' equity. Total stockholders' equity, which is just the two of those added up, so 525,000. And then on line 13, this is going to be total liabilities plus, or and, they say and stockholders' equity. So on line 13, you have total liabilities and stockholders' equity. Which is your 18,000 accounts payable plus your 525,000 stockholder equity. So it should be 543,000. So we notice line 6 total assets is 543,000 equals line 13 liabilities and stockholders equity of 543,000. So that's the whole purpose of the balance sheet, is to show total assets equal liabilities plus stockholders equity. Okay. So when you've done the whole balance sheet, those two amounts should equal. Hence the word balance sheet, right? Kind of self-explanatory. So that's the whole purpose of your balance sheet. And that is the last statement that we prepare. Which the reason for that is we've calculated retained earnings on the retained earnings statement. So we have that number to plug in here, so it makes it easier. So again, we do income statement, then retained earnings statement, then the balance sheet. Any questions? I know it's a lot, right? You're learning all the transactions and statements. So I figured we'll do these examples today, and then you have access to this. You can, submit it for grading or just save and exit, however you want to do it. So when you're working on your homework, you can get back into this chapter 1 practice and look at what we did and go over it. Okay. I'm just going to hit save and exit. Okay. Any questions on chapter 1 at all so far? Or anything?